What is up, you guys? A little bit of delay here. I waited a couple days to do this. Part four, right? Chapter four, whatever you want to call it. Let's see. Chapter four is going to be scanning for setups, market conditions, sector rotation, and setup selection. Bad setups can be good if they are in the right sector. Okay, that's pretty important. That's like extremely important. So you guys are gonna have to pay a lot of attention to this. If you don't, then everything that you watch chapter 1 through 3 is not really going to be as effective. So, scanning for setups, you know the setup that you want to look for. So, let's go for that. You're going to have, when you open my layout, you're going to have 1 month gainer, 3 month gainer, 6 month gainer scan. Those are the three that you really need to use. The other ones, you can just ignore them for now until I get, the other parts out. Or not the other parts out, but like a whole new, fuck was that? Whole new series started. Um, all right, so if you're scanning for a setup, you go through, like, let's say you start on the 1 month gainer, you click through here. What you're looking for is a stock that has recently made a big move up and is now going sideways, right? So this would be, you know, you're just looking for the setup, like part one, where you guys understand how to identify the setup. Like, you're not going to want to look at this. Like, there's nothing really to see here. One, it's a biotech. Two, it's just a gapped up, went straight up. So look for the setup, like in part one. UEC, you can see we just found. This is starting to set up. So what I do is I'd flag it, goes to my watch list, which it's already on here. Starting to go sideways, volume's starting to die out a little bit. Recently just made a 100 something percent, 115% move in the past like 4 months. And then if we look at SPY in the past, 4 months, or whatever you want to call it, it's just been kind of shit. So you can see recently the market's been kind of shit, but UEC hasn't. It's been strong. It's been doing the complete opposite. So this would be very strong. And now you'll see, well, before, okay, this is another one. Basic materials. You'll see UEC is also basic materials. What else was basic materials? I think there was another one. Huh, maybe not. If we went through 3 month gainer, wow, these scans are looking thin. Market's been pretty booty cheeks lately. Let's see. So, basic materials, where is it? There's got to be one. Okay, this is LEU, basic materials. So, similar sector. Um, right? Or not similar, same exact sector. Don't know what I'm saying. So, same exact sector. You can see UEC and LEC. Like, these are recent, or LEU. So, LEU has recently been going straight up, right? While the market's been kind of junk. Like, in the last few days, SPY broke down. What's this doing? It's going straight up. So, it's totally going opposite of the market. What was the other one? UEC. Same thing here. I mean, when SPY broke down, this is holding up. It's going sideways versus SPY going straight down like 4%. So if we're like, okay, we can identify through this scan, right? Um that sector is like relatively decent. So right when you see like a few stocks in the same sector or same industry going straight up, then you have to take a look at the sector. So I'm gonna link this industry layout, so it'll come down on here. Can you see that in the bottom here? Kind of. You just go to this industry tab. It's gonna be a whole nother layout, and this will help you individually go through the sectors. So we know, what was it? Basic materials, right? If we look at basic materials, the sector itself may not look all that good, but it was uranium, uranium stocks. Let me double check on that one. I know it was uranium, but basic materials, industrial metals, and minerals. So if we go to basic materials, industrial metals, and minerals, we can see that this has been going sideways for quite a while. It's got this monthly flag, so it made this big move up, 178%. It's going sideways. We're basically getting a setup on the whole sector. And if we go through this individually, let's go through with a scan. You'll see UVORI, UEC, URG, LEU, UUUU, whatever the fuck, CCJ. Recently, so all these uranium names are going straight up. That would be a basket of stocks that I'm then going to focus on. So I find, which ones are leading, And then I'm like, okay, well, those are in this sector. Those are in this industry. Maybe it's not the same industry. Maybe it's just the same sector. But I'm like, okay, let's take a look at these. And then I'll look in further and figure out which one's the leader. So how do I know which one's the leader? Well, which one is up the most? It's really that simple. So this one, CCJ is up 74%, 75% in the last 6 months. UEC is up 117, 115% in the last 4 months. So this one, is already above CCJ. Why is that? Well, CCJ has a 3.11 ADR. UEC has a 5.72. UROY, if we look at this, it's got a higher ADR than UEC, but UEC has recently made a bigger move. So UEC, out of the uranium names, is going to be my focus. And you can see that it's setting up. So although the market conditions right now aren't the best, I will probably trade UEC just because I like how it's been going straight up, completely, opposite of the market. It's like, for some reason, it doesn't care. Don't know why, but I don't care. I don't care why it's going up. I don't care why the market's going down. I literally do not care. I just look for the setup and I trade the setup, and that's it. So this one, we'll have to give this a few days probably. I would like the 20 to catch up and let this go sideways a little longer. Could it go tomorrow? Could it go soon? Yeah, but I would like for this to set up a little longer. Only reason is because the weekly, you can see like 19% extended from the 10-day here. I'd like that to catch up a little, or the 10-week SMA, and then I'd like that to catch up a little. But another thing is, if we look at like a theme or something, so these are the ones that were coming up recently. So CGC, ACB, and then we have the whole like sector for or ETF for it, MSOS, Tilray. So these are like weed stocks, right? Healthcare, drug manufacturers, CGC, ACB. So these recently made a big move up, right? ACB made a 154%. CGC made a 383%. Tilray made a 123%. So CGC is the one that made the biggest move up. If these were to set up, which is still possible, you can see it's holding this 20. It's building higher lows. Doesn't really want to go much lower from here. Could this set up in the future? Maybe. So I'll keep my eyes on it. But I'm not going to sit there and look at ACB when I know CGC is leading the weed stocks. Why would I waste my time? I could look at it and whichever one breaks out first, I can go for that. But I'd rather take the one that has made the bigger move up and has had more volume. I don't know if it's actually had more volume. Maybe more dollar volume. But I'm just going to look at the one that's made the bigger move up. That's basically it. Or the one with the best setup. As long as it's relatively a leader, you're good. So you need to find that little group of stocks, or that basket of stocks, that sector that's performing extremely well. Like I was saying, right now it's a little hard to show that for you. Recently we had energy, right? So if you were to simply just go through these, you'll see you're not going to look at this and be like, wow, this is a great sector. Like, this looks fucking horrible. Tech, it's going straight down too. Going straight down. Real estate, industrial, straight down. Healthcare, going straight down. Finance, straight down. Energy, what do you know? It's been going up. Not the most, but it has. Consumer defensive, not really all that good. Basic materials, really isn't all that good either, but we did see that basket of stocks uranium, so that would be kind of like a theme, I guess, or like a subcategory. It's not really the whole sector, but uranium is obviously performing well. We can see that just in, what was it? Just in UEC, CCJ, UEU. If we look at all those, you can tell that, uranium is doing good. It's really not that difficult. But energy, you can tell just by looking at the sector. And what do you know? The breakout setup was on the weekly chart. Big move up, sideways, builds these higher lows. If we were to make some little lines here, briefly, I'm going to make it perfect. You can see it broke out right here, and now it's been going up. And there has been a lot of stocks in here. So PFIE, I would consider the leader of the energy sector. It's way thinner than the majority of the names, but it's doing well. You can see that this made a 157% move. None of the other ones really made a move like that. This one's made a pretty good move. 87%. So this one would be another candidate. Pretty low volume too, like pretty thin. HPK, hasn't really made that much of a move. VIST, this thing's been going straight up. Don't know what's up with that, but it's just not stopping. Had a little setup right here. Nothing crazy, but today it broke out. It's been doing pretty well. TDW, a lot of these stocks in this sector are just been going straight up. You can see TTI is setting up here. This one I'm actually a pretty big fan of. It's made a 144% move. PFIE made a 163% move, but it's way thinner. TTI has, like 6 times the market cap. ADR is much lower, but it is setting up a lot better. It's already looking pretty good. Energy's looking solid right now. The only thing is just overall market isn't that strong. We have things like this, NGS, where it looks like it's just going straight up. Although it looks like it's going straight up, it's only made, a 50% move. So you really got to look at that. You really got to check how big the move is. But yeah, once you can go through the scan and you see like a basket of stocks, a group of stocks, a sector, whatever it is, leading, then you go from there and you figure out which one is leading that sector. How do you figure that out? Or, group, whatever. How do you figure that out? Well, which one's up the most? Can it get much easier than that? Pretty simple, right? And then we can see that PFIE for energy was technically up the most, and energy would be a leading sector right now. Yeah, it's technically up the most, but what's setting up better? TTI with very similar stats. Straight fucking up. It does not want to go lower. Set up right here. Broke out. Made a 20% move in 13 days. So 4% ADR. 20% in 13 days is not a lot. But like if you look at the market, this didn't make a 20% move. I'll tell you that much. From bottom to top here, there's a 4% move. And, TTI is going 20%. So you're outperforming that way. Pretty easy, right? Let's see, what else? So identify leading sector or group or whatever. Then identify the leader. And go from there. Market conditions. So we'll look at SPY for this. You can also look at CompQX. If you want to, your CompQX isn't going to update like real time unless you pay for it. So we'll just look at SPY. They're pretty freaking similar. So SPY, when do you stop trading breakouts? Well, you'll notice around this period that breakouts started to kind of suck. And, I was losing breakout left and right. And I'm like, okay, what the fuck? A little weird. Right after, market starts to come down. So right when the 10 goes below the 20 on the daily chart on SPY, you should stop trading breakouts unless like you're pretty experienced. There will be times like I would say UEC is probably a decent setup to take, TTI, but reduce your risk. So if we go to SPY and we see that the 10 is below the 20 once again, 20 is even below 50, 10 and 20 are below the 50, so it's really not looking all that good. But let's just say we were right here and 10 was below the 20. I'd probably cut my risk from 1% to like 0.5%. Or let's say you're risking 2%. Bring it down to 1% on really good setups. Like, just don't take anything if you don't know what a really good setup is. And, a really good setup means a really good setup in a really good sector, and it's a leading stock. So if you can't identify that, just don't do anything, because it's already hard enough to trade in this period and actually catch all the leaders and do really good. When this happens, just don't trade. Like, if you suck, just don't trade, because you're going to suck a lot more. If you like I was saying, if you're good and you can identify everything, then during this, cut your risk in half. During this, cut your risk in half again, so go with like 0.25%. Like if UEC and TTI, those go, like I'll probably do 0.25% risk, and I'm not going to I'm not going to have multiple positions in the same sector, so I'm not going to have like TTI and PFIE. It's like they're both energy. I'm not going to take both of them. I'm going to take one or the other. So right now, I'm leaning more towards TTI. Before, I was leaning towards PFIE because TTI was just kind of going straight up, didn't really set up. But now that's what's happening with PFIE. And then for uranium, I'll go with UEC, just UEC, not UEC and UUU, not UEC and all this other stuff like UROI. I'm going to choose one and I'm going to stick to one. So that's it. And I've already chosen that UEC because it's setting up first, made the biggest move. And that's pretty much about it. So I'll risk, 0.25%. You can see here on the risk calculator, it's telling me 26K or whatever. So I'll take that number and I'll reduce it. Or, well, this isn't even my risk, but, you know, I'll calculate it when the day comes that, might be tradable. So, SPY, when the 10's below 20, don't trade unless you're really fucking good. So, most of you guys should not be trading when the 10 is below 20. Typically, I don't even trade when the 10 is below 20. When the 10 and 20 are below 50, like, you probably shouldn't trade at all. Like I said, just cut your risk in half again if you know what you're doing. Even then, I'll probably end up getting burnt on these or not getting much follow through, but it's like, it is what it is, I guess. Yeah, what else? What else can I go over? Oh, yeah, bad setups can be good if they're in the right sector. So when you look at the perfect setup, let's use NVIDIA for an example. If you look at the perfect looking setup, the reason this was such a perfect setup is because it was a really good looking setup in a really good sector, and it was a really good stock in that sector. But if you're looking at like PFIE, let's say, the setup might not be all that good looking. Like, there is some sort of a setup here. This could end up going, relatively soon. It makes it a much better setup because the sector that it's in, and because it's made a big move, and because it's a leader in a leading sector, if that makes sense. Like, you're not going to find super beautiful looking setups all the time. You're not going to find the NVIDIA all the time. That's rare. Mara at the time, I mean, was, this was a pretty decent looking setup. It was a really long consolidation. That was 2 months. But this setup before was pretty fucking ugly, but it did make, a 40% move in a few days because it was in the right place at the right time, realistically, is what it comes down to. Carvana here was like, a leader of the market for a while, made a 100% move in 2 weeks. Setup there that's not, typically what I would want to see, but because it's a leader in a leading sector, right? That's it. That's literally all it comes down to. So the context is going to be more important than the setup itself. And you'll find that in the beginning, you might be looking for just perfect setups and you won't be focusing on the context. But I'm telling you, the more you focus on the context, the more money you're going to make. Because that's really what it boils down to. It's like, you have to be focused on the leaders in the leading sector. And that's about it. That will come with market experience, and that will not be like, you might watch this video and still be like, what the fuck? Because you're going to have to go through these scans. Your scans are going to come up with the same stocks that we came up with today. 3 to 6 months from now, things are going to be way different. Next week, it's probably going to be different. So that's, that's why the Discord makes sense to be in, I guess you could say. Helps people out, figuring that part out. But over time, the more you do this, over the next 6 months, you're going to figure it out. If you can't, then you're pretty stupid. So yeah, I think, let's see. So I guess recap of this video. How long has this been? How do I end up yapping for 20 minutes like that? All right, so recap of this video is going to be focus on the sectors. So make sure that you go through the scans. You come up with a leading sector. Sometimes there's not going to be like a definite leader like that, or maybe there'll be multiple. You might see that tech and energy are performing well. You might see that basic materials and energy are performing well. Like right now we have, the oil and gas stocks and uranium and some weed stocks. I mean, the weed stocks are kind of dying out, right? A little bit. Might not be too bad, but you know what I'm saying? Like, let's say we have like the weed stocks right now, which would be a theme, because it's not a sector. There's no sector called weed stocks. Uranium, which is like kind of a theme, I guess you could say, but it's like an industry in a sector. Let's just call it a theme. So we have uranium, weed stocks, and then for sector we have energy. I mean, look at the gas prices; they're going straight up. So why aren't the stocks going straight up? Well, surprise, they are. You can look at CVX; it just broke out today. Like, yeah, this is a low ADR, but this is something that was good for options. So this broke out today. This little range here, got my price targets set. And the reason, that I took this is because, actually in the morning I didn't take it, but I'm glad I didn't because it would have stopped you out. The reason that I took this is because, it was a good sector. Yeah, it's a pretty big market cap, very low ADR. And in the first 5 minutes, you would have been stopped out because you would have entered right here, and then 5 minute highs now became up here. But you would have entered right here. Next candle would have stopped you out at low of day. Your re-entry would have been right here, which you after getting stopped out that quick, you might be a little scared to re-enter. So I waited for this, and I was like, whatever. I just let it go. And then when it came down here, I did end up buying it because I was like, it's pretty close to re-entry. I bought it like around here. And then right after that, it went up 0.5%, whatever, 0.6%. We'll see where it goes tomorrow. I didn't put much at all, like 0.25% risk, but pretty solid. Yeah, so you can see the context of the setup is, fucking more important than anything else. Like, this is a pretty shitty looking setup. This only went up 5%. It went sideways right away for almost a month. But it's got this really strong breakout day where it's moved like, let's see, it's moved like 1.5%, so about ADR. And it's been doing pretty decent. So why is the success rate on this increased? Well, because the context of it, it's in a good sector and it's a large cap in the sector. Like, it's a pretty strong stock, based on everything that's going on and just based on how it's been performing. You can see it broke out right here this day. That would have been ideal to get into. But yeah, I can't really get much easier than that. I think that honestly wraps it up. Like, what else could I really say? All right, guys. I'll see you in the next video. I guess that's going to be it for this breakout Bible thing. I think what I'll do is I will make a new video. I'll like combine all the videos. I'm going to have to figure out how to do that. I'm going to combine all the videos and then I'll make it into like one full video, and then you guys can watch that if you really want to. I don't know, because what I did, I used to just throw shit up on my TV and watch it over and over and over. If you guys want to do that, then do it, because I'll just end up doing that anyway. Added another 4 minutes to the yapping session. Sick. Yeah, I'm gonna end the video here. All right, bye.